Today we'll be discussing on the topic trading patterns, symmetrical triangle, asymmetrical triangle, descending triangle, flag patterns, bullish and bearish. So make sure you stay till the end of the video. Let's begin the video now. So the first triangle pattern that we'll be seeing now is symmetrical triangle. How does symmetrical triangle looks? It's something like this. In this kind of pattern, lower highs are created. 0.1, 0.2, 0.3, 0.4. The lows are getting higher and the higher is getting lower. Okay, in order to identify a symmetrical triangle, you need at least 3 points. Once you have identified 3 points, draw the trend lines. If you have not watched a video of trend lines, I highly suggest go and watch that first. Now once you have identified 3 points and the triangle pattern looks like this, now how you are going to trade? Are you going to buy or sell? That's the question. In symmetrical triangle, there are 50-50 chances. Now the question is whether to buy or sell. In symmetrical triangle, there are 50-50 chances that the market is going to act. So make sure you get a closing of a candle before you enter. Now which time frames are the best to enter? For intraday players, you can trade this on 5 minutes and 15 minutes. If you are a swing trader, 30 minutes, 45 minutes and 1 hour. So decide the goal and the targets before you enter the trade. Now what will be the stop loss? Suppose a triangle pattern has broken here. Now which candlesticks you need to identify and you can take confirmation. Again, the video is already uploaded. Bearish candlestick, bullish candlestick. Watch them both and take the confirmation with the help of symmetrical triangle. Suppose if you get a bullish candle over here and you enter at this point. Now how to take the targets, I'll make another video talking about the stop loss. The stop loss should be the low of the triangle. You can keep the stop loss from 1 to 2% if you are an intraday player, and if you are a swing trader you can keep more than 3 to 4%. The stop loss should be below the triangle. Make sure that your stop loss is not inside the triangle, because sometimes what happens, the market goes up, takes a pullback and then starts moving up. However, there are two entries in this pattern, one at the break of the triangle and one at the retest. The retesting is for the swing players and breaking the candle is for the intraday players. Okay, now let's see this on charts. Point 1, point 2, extend the line. Point 1, point 2, point 3, extend the line. Triangle broke with bullish candle. If you have not seen the bullish candlestick pattern, make sure you watch it and then trade these patterns. Intraday traders can enter at this point. Market went up a bit came down, took a retest, swing players are watching this, morning star formed, bullish candlestick, and the market went up. Stop loss over here. Simple price action. Remember, in market, simple thing works. The only thing that you need to keep in your mind is that if you are using this strategy once and if it fails, does not mean it is going to fail continuously. Out of 10 times, it will fail 3 to 4 times. If you keep repeating this 10 times and your stop loss is fixed, definitely you are going to become a profitable trader. This is what most real traders do. We stick to our stop losses, we stick to our setups. Now coming to another triangle pattern, ascending triangle. Now ascending triangle looks something like this. In this what happens is that low gets keep on increasing. The price moves up and the resistance remains the same. That means the price keeps on falling from the same point. Okay, like symmetrical triangle, here also you require 3 points to draw this triangle. Once you have identified this triangle pattern, now in this case there is 75% chances that the market is going to go up and 25% that the market is going to come down. But you should be prepared for taking both side entries. Wherever the triangle breaks, you will enter. If you take a long position at this point, breaking with a bullish candlestick, the stop loss should be below the trend line that you have drawn. If you are taking a short position over here, after the triangle has broken, your stop loss should be above the resistance zone. Intraday players will enter at this point. Swing traders will wait for a retest. Let's see this triangle pattern on the charts. Over here, point 1, point 2, almost point 3. Remember, in market there is not. Remember, in market you need to become friends with the word almost. Over here, lows are getting high. Triangle broke at this candle, bullish, and the market went up. This is a daily time frame, so make sure that you know your goals and you set your targets and your stop losses according to it. Now this line extended. Intraday players will enter at this point. They will take a target. Market broke the triangle, came down. Symmetrical triangle, like I said before, market went up, took a retest from this ascending triangle and then went up. The only thing that you need to do is that decide your ratio for taking the profits and the loss that you can bear. And always remember, keep your trend lines, triangle patterns, support and resistance zone drawn on the charts. They are, if they don't work today, they are definitely going to work after few days. Talking about another pattern, which is the descending triangle. In descending triangle, highs getting low, highs are getting low, and the support remains the same. In this case, the chances that the market is going to break down by 75% and market is going to go up by 25%. However, as a real trader, you should not be biased. Wherever the market breaks, you will enter. Let's see this on the charts. Support remains same, highs are going down, that means the price is going down. Broke with a bullish candle, market went up. In this case, what happened? The market did not break down. However, the chances were by 75%. The market went up. So wherever the price moves, you're going to move with that. You're not going to have a illusion about the market and the market is going to fall. Let the market break an important zone. In this case, it was your resistance. It was your descending triangle. So you have the confirmation with the candlestick and then you trade. Now let's see flag patterns. In flag pattern, what happens? The market goes up like this, and a structure is formed like this. The market keeps consolidating in this region. Right? Now you may have heard that bullish flag breaks only upside, right? We have taken trade where the flag breaks downside also. So there is no such thing that the market is going to go up only. Remember that. Similar case is with the bearish flag. The first thing that you need to remember is that there is no such thing as called bearish flag or bearish or bullish flag. It is just a structure. You need to understand the structure, the psychology of the market. Trade where the price moves. Don't go against the price. In this case, the market is going to fall. What you're going to do is that wherever the market breaks, you will enter. If the market is breaking from here, you will keep a stop loss of this point. If the market is breaking here, you will take a short trade and take it and keep a stop loss over here. Similar is the case over here. The only thing you need to remember is that draw your trend lines, support and resistance, combine this with the triangle patterns, the flag patterns. You will not always see the flag patterns and the triangle patterns. So what you're going to do is first identify support and resistance, draw your trend lines. No one on the YouTube has disclosed and explained what we have given you. People are selling these courses, these patterns for thousands of dollars. We have just given out you for free. These are the real entries that we are making. These are the real entries how we take the trades. Now we'll be definitely making more videos in the future. So make sure you are subscribed to the channel, like this video, comment which videos you want, what you want to see from us, how can we improve. So yeah, that's all for today. Thank you for watching.